Hey everybody, welcome to Money Meka. I'm Andre Campbell. As I've mentioned prior, extensive experience in the wealth management area as a Series 766 licensed individual, as well as a property and casualty broker license and a realtor license. So I've had quite a bit of experience on various areas to be able to talk to you today about these things, not only in theory, but in accomplishment. Not to mention business acquisition, franchises, independent e-commerce, as well as franchise business ownership. So listen, hope you're having a great day today. And today I'm going to touch on a few things I want to share with you concerning a beginner's guide to financial freedom. Today's topic is crucial for anyone looking to secure their financial future, and investing is a huge portion which I have utilized myself as well as helped others to accomplish. So whether you've started out, which I get tons of questions on, or been thinking about it, this video is going to be a comprehensive guide to getting you started with investing, okay? Let's clarify what investing actually means, all right? And investing is essentially putting your money to work and earn for you. It's about making your money grow rather than letting it sit idle on the sidelines, which I've seen many times. I had clients who come into the financial advising office and had hundreds of thousands, tens of thousands, hundreds of thousands of dollars in bank interest earning accounts, which usually like a savings account is going to pay like 0.01%, 0.03%, right? And the reality is that that is not going to be able to grow your money when inflation is pegged. Back then it was 3%. Right now I'm thinking somewhere along the 4% plus lines. And that essentially means you're losing the power of money over time, right? Because you are paying more, which is inflation, for a cost of goods and services at 4%, but you're getting a 0.01, right? So you're losing, you're negative 3.99 every single year. That money's being worth less. And I've seen it times and times again, where people want the guarantee, which is great, and it is necessary, but it's necessary for certain types of funds. And I'll get into bucketizing all those other areas at a later date. But basically understanding how your money should be put together in different areas so that you are able to maximize in those areas while still keeping stability and managing volatility, and still having a certain fund security, but then still taking advantage of the long-term prospects, okay? And letting your money grow for you. All right, so first, number one, the beginner's guide to start investing is to understanding your financial goals, right? Ask yourself, what am I investing for, right? Is it a car? Is it a house? Is it financial security, financial freedom? Is it a business? You want to buy a business? You'd like to leave the rat race? What are you investing for? Your goals are going to determine your investment strategy, okay? Obviously, depending on what it is, you're going to be more safe depending on what that goal is and the time horizon of the goal. Time horizon essentially is how much time you have towards executing that goal. So for example, if I would like to buy a house and I have a 5-year time horizon, basically in 5 years, I want to put that money aside to accomplish that goal, okay? So those are some of the things to understand about your financial goals. Is number one, understanding your financial goals, understanding your time horizon, all right? Number two, educating yourself, right? Education is key. You know, I grew up in an era where education was just paramount. I mean, it didn't matter. You played sports, okay, that's great. You're great. But if you weren't educated, it didn't make a difference, right? Education is key. Reading is key. Learning from other people, key. things that you need to do on a daily basis is to educate yourself. I read every single day, constantly sponging, constantly doing it. And in a time where people just want to pick up their phones, it's okay. But the question is, what are you reading, right? I see many times people are scrolling through their phones. They're looking on these social media sites, but the question is, what are you reading? Are you on CNBC, or are you on like one of those other gossip websites, right? And where are you spending your time? Nothing wrong with the gossip websites, but how much time are you spending there? Yeah, look at them now and then. We all do. 30 minutes, whatever. But then you should be putting in another hour of totality in reading CNBC, CNN, The Economist, things that will educate you. And I'm talking about proper sources as well, because that's another thing I noticed that people don't understand, is that you have to be reading the right material from the right people. Wikipedia, Investopedia, they're good for basics, but you have to check the source of who wrote the article, right? What kind of credibility do they have? Or is it someone to just put something into ChatGPT and now have been a proclaimed financial guru, right? What have they done? What is the credibility? So educating yourself, educate yourself, educate yourself. Whatever it is, if it's stocks, it's bonds, it's mutual funds, ETFs, look at that. Online courses. Courses are a big thing these days. Everybody's selling a course, right? And it's okay. But once again, who's selling the course? What kind of verifiable acumen and background do they have to be presenting that course? Now, you do have people who are self-taught, right? That have now, have a niche and they're great at it, and they're great at teaching and educating people. But you have a lot more people who are just out there trying to sell you something. They have no credibility. They've never done it. Real estate investing, how to flip a house, right? Have you flipped a house before? No, I flipped many houses. But have you flipped a house? Where did you flip the house, right? How much did you make off of it? How much did you lose off of it? How much were your rehab costs, right? Stocks and options. Have you day traded before, right? How much did you make? But then how much did you lose? Because any day trader tells you never lost money, they're lying. 100%, right? So educate yourself, verifiable resources, okay? Next, setting a budget. Budget is huge as well. You have to know what your income and expenses are, right? What's going in, what's coming in, and what's going out, okay? And you have to have a key on that. And basically, that is basically what's your income, how much money you're making on a weekly, daily, monthly basis, minus how much your expenses are. Expenses never stop. Income can stop. Income can stop through layoffs. Income can stop through you leaving a job. Income could stop through, sickness, things of that sort. But layoffs and sickness, disability are things that we cannot control. But we can control our expenses, right? So understanding our income and expenses on our budget are key to understanding how we can do better financially. Building an emergency fund, right? Next, so understanding an emergency fund. Emergency fund, some people say 3 to 6 months. I like to go in a longer time frame, right? My time frame is a year out, a year plus. You should have enough liquid assets or be targeting enough liquid assets to have a year out. What does that mean? That means that if anything happens to you or your family or your income, you can live the same lifestyle, right, for 1 full year and never have to make one change. Never. What that does is give you time to be able to recoup and to get another job or to heal or for other family members to assist. But that emergency fund should be as long as possible. And you can build that emergency fund not only in a savings account. Remember, you can build that in a 401k, you could build that in a brokerage account, because that's also part of liquid assets that you can liquidate if you need to for various reasons. Another way to financial freedom is retirement accounts. So there's vast amount of retirement accounts. There's 401ks, there's 403bs, there's IRAs, and there's so many, and everybody's getting so into being distraught about it, right? The number one account you want to start with is if you're at a corporate job or you own a business, you want to start a 401k. A 401k is an account. It is just the account. It has no investment in the account when you start the account. It is just you opening the account. So think of it this way. 401k is the car, right? It is the car that you're driving, right? But the car's not moving yet. It is just the car. So you've bought the car and now that's your 401k, the car, right? Now, what is in the gas tank and when the car starts moving, that's going to be the investment vehicle within the 401k. If I buy a ETF or index ETF within a 401k and put it within a 401k, then that ETF is going to be what is going to determine how well the 401k account gets and does, or how bad, right? People sometimes I used to hear, oh, I'll never do a 401k. I'll never do a 401k. Well, that's the craziest thing I've heard, okay? Number one, you should always do a 401k, especially when your employer is giving you a match. What's a match? A match means if I put in 3% of my paycheck and they're gonna match 50% of that, they're gonna put in 1.5%, meaning there's free money. It's free money. So now I'm at 4.5%, right? Which the 1.5 is free. It's something they're giving me just for being an employee, okay? So I would want to do that. Now, what type of investment would I put into that 401k? Every 401k is gonna have various investments, and HR will be able to give this to you. And you would wanna look at a few things and talk to an advisor about time horizon, what your goals are, where you are, because someone that is 65 and someone that's 25 or 45 are all gonna have different allocation of that, okay? So, and we'll get later into that into our other videos. Brokerage accounts. Brokerage account is, once again, another account. What's in the brokerage account, whether it's a stock or a mutual fund or ETF, is another way of building financial freedom. And then we get into diversification. Diversifying your portfolio, think of it like a pizza, okay? You have a big pizza, and essentially diversification means you might have one slice of pepperoni, one slice of pineapple, one slice of mushroom, one slice of veggie, you know? And all of that together puts together a diversified portfolio, meaning I have different pieces of the pie that have different variations. And that's why you'll hear a percentage 60-40 split, 70-30, because it might be 60% stocks, 40% bonds. So understanding diversification, which we'll also get into, and investing for the long term. Listen, investments have to be long term. Unless it's lottery or something that's gonna hit real quick with the potential of hitting real quick. And that's why a lot of people get caught up in these get rich quick schemes and these pyramid schemes. The reality is that consistency and long term are the key. Being consistently putting money into these accounts, and always set them up automatic. Always have it automatic. It constantly should go from paycheck to the account, paycheck to the account, automatically. Over the years, you're gonna accumulate. And when you accumulate, you start getting into compound interest and you start growing even more. So that's some of the things that are gonna be able to help you build your financial freedom. We just touched on the basics here, and this is the key. And I just want to thank you for your time. Remember, investing is a journey, okay? It's a marathon. Financial freedom is a marathon, but you have to start somewhere, okay? So, wish you all the best. Please subscribe and share this video with someone today. Be blessed. I'll see you next time.